Hey everyone, welcome back to the channel. This is LC. In this video, I will apply DuPont Analysis on WELLCAL's ROE. WELLCAL is Malaysia's largest industrial rubber hose manufacturer that specializes in manufacturing of rubber hose for OEM and manufacturers. At the time of recording, I own WELLCAL shares. I have no intention to promote this stock here. WELLCAL is the only publicly listed company in Malaysia manufacturing industrial rubber hose. There is no comparable. So, DuPont Analysis is a very good approach to analyze its ROE. This chart shows ROE of WELLCAL from 2015 to 2019. In the past 3 years, WELLCAL's ROE ranged from 30% to 35%. Looking at the numbers, 30 plus ROE is very high, but we need to validate whether its ROE are organic or not. We need to determine what financial activities that contribute the most to the changes in ROE. Here is the standard ROE calculation for WELLCAL. Net income available to common shareholders divided by total equity attributable to common shareholders. Let me expand the rows to reveal DuPont Analysis. First, we calculate net profit margin by dividing net income available to common shareholders with revenue. Except 2018, WELLCAL enjoyed 20+% of net profit margin. Second, revenue divided by total asset to get asset turnover ratio. As you can see here, WELLCAL's asset turnover rate range 1.1 to 1.3 multiple. Third, to calculate financial leverage, we divide total assets with total equity attributable to common shareholders. Financial leverage of WELLCAL declined gradually over the years. Last, multiple net profit margin, asset turnover ratio, and financial leverage to get ROE. Very important, ROE calculated by DuPont Analysis must exactly same with ROE by the standard formula. If not, double check your calculation. What is our conclusion here? Which are the financial activities driving WELLCAL's ROE? Financial leverage is definitely not the contributor because it has been dropping over the years. Asset turnover ratio is the main component, and the relatively stable net profit margin play an important role too. In my opinion, the conclusion is ROE WELLCAL is mainly driven by operational and sales excellence, not by leveraging. That's all for this video. I will provide another example of DuPont Analysis in the next video. Stay tuned. If you enjoyed the video, give me a like and share it out. If you didn't, a dislike. Subscribe for more, ring the bell, and I will see you in the next one.